Hi, Chris Sorensen, founder of Help. This is one of those topics that really makes you and I both very, very angry. The question is, why won't they modify my loan? I wish you guys would pay attention and let me talk for the next 30 minutes straight, and maybe we can, but what I want you to hear is the following. They're not doing it for one reason and one reason alone. In class, you know the answer. Why do banks exist? That's right, to make money. I'm not vilifying them, you just have to understand that they are single purpose. I'm not talking about your small community banks, the people actually that go to the same chamber of commerce and their kids play in the same sports fields. I'm talking about the mega financial institutions that held a shotgun to the head of the American taxpayer and said, we're too big to fail, and if you don't give us taxpayer money, we're going to take the whole financial system down with us. Well, I'm a little bit resentful about that. Probably you are as well. Now, we need to separate between the two main people that are having troubles right now. There are those people that went out and sucked all the equity out of their property when the values went through the roof. They used their home as an ATM. They bought a Hummer, they bought a matching Wave Runner set, and it made the rest of us dads look terrible to our children because they were going out on every weekend and riding motorcycles and going to the river and having a good time in the lake while we're staying home working and maybe just going to the baseball games with our kids on the weekend. I don't feel sorry for you. If you're the person who used your home as an ATM machine and you sucked all the equity out, potentially committing fraud, well, you're going to have to pay the piper, and that's what foreclosure is all about. It's getting a start over. I'm not going to judge you. I'm just going to tell you I'm not here to help you. But I am here to help the following. I've cried with too many grown men who have defined themselves by how they provide for their wife and their children, and they have lost their way. They've been furloughed. They've been laid off. Their overtime has been cut back. And now they wonder, well, where's my bailout? Why won't the bank help me modify my loan? Well, the key reason is this. There is a lot of way for banks, well, strike that, master servicers to make money that you're not aware of. We're going to be talking about in these videos, and hopefully some of you will watch some of these more detailed ones. I'm going to talk about what a shared loss agreement is. So make sure after this is done, you look for the word shared loss agreement and watch that video. I'm going to be talking about pooling and servicing agreements. I'm going to be talking about lien insurance. I'm going to make sure you understand the difference between a recourse and a non-recourse loan. Why did they switch in the early 2000s from what we call standalone second trust deeds to what many of you have, a home equity line of credit, which makes it that much more difficult to get your loan modified? I'll give you a hint. It all comes down to one word: money. They were doing things obviously to make money. Now listen, that's their purpose, so I don't fault them for that, but I do think that we all got manipulated and taken advantage of. I'm not here to say that everybody out there missing a payment is a victim, but quite frankly, there are a lot of you that are. If you look at some of the statistical data and some of the information provided back in 2004, 5, 6, and even 7, even Fannie Mae and Freddie Mac were telling you that values are going to go up. Heck, the National Association of Realtors, David Lira, the chief economist, wrote a book saying there is no boom-bust cycle. For goodness sakes, if you can't trust NAR, the company that actually I represent sometimes with respect to the realtors, who can you trust? Well, everybody got caught up in it. So we all have a little bit of blood on our hands, and now what my job is to do is to help you get your modification. So why don't they modify? Quite frankly, what they're going to do is they're going to look at what's in their best interest. Should they modify the loan? Should they foreclose? Or should they short sell? Well, if they have lien insurance, if they've got private mortgage insurance, if they've got that shared loss agreement, or they've got some sort of interest that's going to protect them, or they've looked at your particular neighborhood, they've run your individual zip code, and this is a fact, they've run your zip code in the net present value test that they must conduct. And if it turns out that too many people in your particular zip code are failing to keep their terms, and they've taken back too many properties in that particular area at that point in time, or offered too many modifications, they're not going to offer you one. You could have two borrowers equally the same time on the job, same FICO score, same everything. One may get a modification and one may not. Make sure you look for some of our live classes. We teach a class that's about 3 hours long, free to the public, and I would highly encourage you to write to your local elected leaders and see if we can't be invited out to your community. We'll make sure that you clearly understand this. But for now, just know the reason why sometimes your modification won't go through is because you didn't align yourself up with the proper help certified professional, the right HUD approved counselor, and you got a false start. Most are not going to go through, but I promise you, if you follow our directional steps, we'll increase your odds of success. Thank you.